Good morning, I'm Peter Milios from the Finance News Network. Overnight, the major averages rose thanks to strong performance in the tech sector as Wall Street aimed to bounce back from a challenging week. The S&P 500 gained 1.41% and the Nasdaq Composite jumped 2.2%. It was the tech-heavy index's best day since November 14. The Dow Jones Industrial Average added 0.58%. Investors were quick to buy into the technology sector, which had experienced a 4% drop the previous week, particularly as yields fell on Monday. Notable tech companies like Nvidia surged more than 6.4%, reaching an all-time high, and Amazon also climbed 2.7%, leading the charge in Nasdaq's upward movement. Additionally, Apple saw a gain of 2.4% following Evercore's ISI's advice to clients to buy the dip from the previous week. In other news, Merck & Co. announced its acquisition of Harpoon Therapeutics for $680 million, bolstering its oncology portfolio with the addition of immunotherapies. This move was prompted by the impending patent expiration of its blockbuster drug, Keytruda. The offer of $23 per share in cash for the Harpoon represented a significant 118% premium over the stock's recent closing price. Boeing has experienced a sharp decline in its share price of 8% following the temporary grounding of several Boeing 737 MAX 9 aircraft for inspections after an Alaska Airlines fuselage section blew out. As a result of the lift in tech stocks, the technology sector was the best performer overnight, surging by 2.75%. Energy was the only sector in the red. Meanwhile, asset managers were engaged in a fee competition regarding potential US Bitcoin ETFs. BlackRock proposed a 0.2% fee for the first year or until assets reached $5 billion, while ARK Investment Management offered fee waivers for the initial 6 months or until assets hit $1 billion, ultimately setting at 0.25%. Invesco, on the other hand, planned to waive fees for the 6 months or the first $5 billion before settling at 0.59%, pending a decision from the US SEC for possible rapid fund launches. This week, traders were eagerly awaiting more clarity on the Federal Reserve's rate cut strategy. The release of the December Consumer Price Index on Thursday, followed by the Producer Price Index on Friday, was expected to shed light on whether the central bank's efforts to bring inflation down to its 2% target were bearing fruit. In the commodities market, US crude oil prices took a hit, dropping by over 4% on Monday. This decline was triggered by Saudi Arabia's decision to lower prices for its primary crude product, raising concerns about weakening global demand. Saudi Arabia's move was aimed at safeguarding its market share in the face of increased US production and competitively priced oil from Iran and Russia. Additionally, the LNG market was bracing for a substantial supply wave that could lead to a significant price drop of up to 47% by 2027, according to forecasts from Bernstein Research. This shift in the market dynamics was driven by reduced output from aging LNG plants in Australia, once a major exporter, and the United States, emerging as the world's largest LNG exporter. Zimbabwe faced a 15% decline in gold production in 2023, with output totaling 30 metric tons. This decline was primarily attributed to electricity shortages and currency instability. Gold producers grappled with challenges arising from currency devaluation and power cuts caused by aging coal-fired plants, resulting in production falling short of the government's target of 40 metric tons for the year. Looking ahead to the Australian landscape, the SPI futures are pointing to a 1.1% gain. Thank you for listening.